Hey guys, uh, this is Murali from Stock Market Signals. So this we're going to start a new video series, and this is like a beginner series that we are starting out, and this is the first video. So this video is geared towards like let me tell you like who are the audience if it actually makes sense for you or not. So this video series is for mostly beginners. So when I say beginners, if you want to start investing, if you want to start investing in a stock market, this is a great place to start. You will get some good insights from here, and you'll definitely gain a lot of value from this video series. Then the intermediate traders, meaning if you already started trading a little bit and then you bought some shares and you either made some money or you lost or whatever, right? It's also a good place for you to gain knowledge because even though in the beginning we will only we'll at least in this video we'll share about like very fundamentals, very high level but eventually we will be going towards the exact strategies and things like that. So we will try to make it very simple, and at the same time the value is there. So even for intermediate traders, I think this video series will be very helpful. And also some traders, if you have like an advanced trader or an experienced trader, if you think that there is like little more scope for your gains, if you want to make more profits, you want to step back a little bit, understand like what this is, what exactly is going on, if there is any strategy to follow. This is a good place to, probably not the first couple of videos, but eventually you'll definitely gain value out of that. So, being said that, let me jump into it. So, stock market, right? Like when you invest in stock market, the biggest benefit, of course, is to make money. Uh, it's this is one of the most, uh, I wouldn't say easiest, but if you are disciplined and if you follow the rules of the game, it is one of the good ways, very good ways, potential ways to make money. That too in India. I mean, everybody knows about it, so I would not go little or deeper into why you need to invest and things like that. So our process here is we'll try to simplify the whole process so that you have simple steps, you follow them, and in a disciplined way, and you make profits. That's our goal. Uh, and other thing, like I could assure you that if you do those things right, if you set up your own rules and rules of the game, which will tell you how, and if you follow them in a disciplined way, and you will make some profits, and it's going to be like very emotionally rewarding experience. Stocks is actually like very emotionally rewarding, and you get a huge kick out of that. So uh, so what is Indian stock market? And it's not like what is Indian stock market. So what exactly is a stock exchange, right? So I'm like I said, this video I'm going to go at a very fundamental level, at a very core level. So we'll just nail that down, put it aside, and then we will move on to the strategy side. So what is a stock exchange? Stock exchange is where most of the companies are listed. Now, for example, let's say you're an entrepreneur, right? So you made a product and you are selling it to different people, right? So what you do is uh, let's take an example, you made a wind machine, right? Which actually a new type of wind machine, which will convert wind energy into power, right? So it has new kind of turbine or whatever. So you research that, you made the product, and then now you want to raise some money to actually build that out, to manufacture that, to market that. So what you say is you go out and say that I need 1 crore of example. I'm just giving an example. You'll say that I need 1 crore of rupees. For that, I will give you this percentage of my company. So instead of doing it at an individual level, you can actually do it at an exchange, at a stock exchange. So that's what a company, or that's what a stock exchange, the whole purpose is. Like a company is listed there, So and then the shares are being traded. So we'll get into that, like what is a share and what is things like that. But at a high level, that's what the stock exchange is. It's basically where the shares of these companies are traded, right? So what are the stock exchanges that we have in India? We have like two. One is like NSE and a BSE. NSE is like National Stock Exchange. This is started in 1992 and started trading in 94. And we have about like 1,500, about 1,500 companies listed in there, right? Then this is more like like more latest stock exchange, and we have another stock exchange called like BSE, Bombay Stock Exchange. That is a little older, like very old. It's been there since 1872. We have about like 5,000 companies in there. So basically, the different kind of companies are listed in these two stock exchanges. So you may be interested in one equity or one company's shares, which will be listed in one of these exchanges. See what I'm saying? Like, so exchange is nothing but where the stocks or shares are being traded of a particular company, and different stock exchanges, or these two stock exchanges, hold different companies of shares, right? They don't hold. When I say hold, it doesn't mean that like uh, they physically hold the shares of these. Individual traders will hold them, but uh, they will process your in the share trading and things like that. And so let's jump to market indexes, right? What's a market index or what market indices? So we have in India, we have like two market indices, like predominantly. One is Sensex. So before we jump into what it is, like, or what kind of indexes that we have in India, like, let me say what an index is. It's nothing but a list of companies. So let's say, you want to track, like five different companies, right? So you have like, five, like companies A, B, C, D, E, and then you actually like, start tracking them. Okay, I mean, this share price of the company A is this much, and cumulative altogether of these five companies is this much. So you want to track at that level, right? So an index is nothing but these, like, somebody picked, like, they picked certain companies. For example, like Sensex, what is one of the indexes that we have is called Sensex. So it has like 30 firms, 30 companies in Bombay Stock Exchange. So you have data all the way, you have like, time data all the way to, I think, like 92 or something like that. But this index is started in 1986. So it's nothing but a number, like, it's a cumulative number uh, of all these like 30 companies in that you can track. And then you have S&P CNX Nifty. So Nifty is like about 50 companies from NSE. Okay, and this started in 1996. So having said that, like, the trading hours, what we have is like the stock exchange starts at 9:55. Both of them, NSE and the BSE, they start at 9:55. They close at 3:30 Indian Standard Time, and the trading happens on Monday to Friday. And the settlements, when I say settlement, like, once, let's say you bought something, and then that has to be settled in T+2, rolling T+2. So let's say you bought something on Monday, you will have to, or it has to be settled by Wednesday, right? Then you will hear also something called like SEBI, like Securities and Exchange Board. So this is basically like think of it like government institute, which organizes, which put some rules and regulations, which make sure, like, nobody's cheating, nobody's like doing fraud and things like that. So that will actually like modulate all this, like, stock trading, and the policies and things like that. Okay, so the market, like, let's talk about the market. So market, like, when I say market, like, the way you trade a stock is nothing, is like an order driven market, right? the simplest way to explain, like I think like this is where the core of it you'll probably understand better in the other terms. Like the simplest way to explain is that uh, let's say like the same wind company, or for simplicity's sake, let's say that company A wanted 1 crore rupees. For whatever reason they want to raise 1 crore rupees. Okay, so what they'll say is, okay, I want 1 crore rupees, and we will issue uh, 10 lakhs 10 lakhs of shares whose base value is 10 rupees. So 10 lakhs times 10, which is going to be 1 crore. So people who are going to buy these 10 lakh shares at a base price of 10 rupees will give, eventually all of them together will give this company a crore. And this company is going to take that 1 crore and utilize it for whatever they promise they're going to do. For example, like for marketing, for manufacturing, or whatever it is, right? So now the company has this 1 crore rupees in their hand, and there are traders or there are investors who have a part of this company as, and when I say part of this company, what they have in their hand is shares, right? So let's say the company gave like 50% of it for 1 crore. It depends on the market valuation when they bought it, but let's say they gave 50%, meaning the about one, like the company's valuation is 2 crores, and 1 crore is by the promoters or like the founders, and the rest of the 1 crore is owned by, or the half of the company is owned by all these investors who have bought the shares of 10 lakh shares. Get my point? So the company's valuation, if let's say somebody, if you want to sell the company, typically, I mean, like we assume that like the company is going to be sold for 2 crores. Out of that, 1 crore will go towards the promoters or the founders. The other 1 crore will go to all these investors who have purchased the stocks and gave this 1 crore to the company, right? That's clear, right? So now a person A has bought person A has bought, let's say, 100 shares of 10 rupees each, right? So he basically had like 1,000 rupees in his hand. So this guy wanted to buy about 100 shares of this company. He thought like, yes, when they start manufacturing, the company is going to be like, the shares will go up and down. We'll talk about like why the share value will go up, but with the hope that the share value is going to go up, he actually like bought 100 shares at 10 rupees each. Now the share price goes up. After 5 months, the share price goes up. Why does the share price go up? Like, it's basically like market economics. Like, if supply and demand, if there are like a lot of people who are trying to sell, the share price will go down. There's a lot of people who are buying and there's not enough people who are selling it, the share price goes up. As simple as that. I mean, they're like the shares. I mean, nobody is manipulating anything. It's like there are there are n number of shares, and and you can only buy what is being available in the market. If it's not been available in the market, if nobody is selling it, you can't buy it. So it's as simple as that. So let's say this company is like they're really doing good. They're making keeping their promises. They're doing really good. Then what happens is like this 10 rupees, the base price that we have bought, it has become like 24 rupees, right? So now person B comes in. Now let's say somebody else comes in, and this guy now his value is like 24 rupees. So he has 100 shares. So his money that is invested, which is 1,000 rupees, has now become 2,400 rupees, right? So now he wants to sell for his vacation, for example, right? So he is willing to sell that, and then I come in, right? Now I look at the market, look at the company. Okay, dude, like this company has gone up so much, and but still it has potential. I'm expecting it will go to like 35 or 40 rupees. So then I actually like buy the shares from this person A at 24 rupees. So the person A has gotten his profit of 1,400, and I invested 2,400 into the company, right? or like, I own about 100 shares of this company. So the market value of the company has actually gone up. That means when you say, like, it's trading at 24 instead of 10, the market value has almost gone up by 2.5 times. That's why it's trading at a higher price. So, like, yeah, he sold those companies. Person here sold those shares of the company, and I bought it. So the share, the certificate, like, it will be transferred to me, right? So there are no middlemen, like, there are no middlemen, nothing. It's all electronic exchange. I buy it electronically. Person A doesn't know who he's selling it to, and I don't know where I'm getting it from. Now I have the shares in my account, which are worth of 22, I mean, like, 100 shares, which are worth about like 24, right? So let's talk about a little bit about securities. I mean, you also keep on hearing about the debt security or equities and things like that. So fundamentally, what it is, like a stock, fundamentally a stock is nothing but it's a security. In banking terms, in financial terms, they call it as a security. What is a security? Securities are Securities are nothing but a financial instrument which has financial value, or an instrument which has financial value. And you don't need to understand exactly what it is. It's like, finance jargon. You'll hear a lot about these financial instruments and things like that. It's something which holds value. Let's call it that way, right? And a security can be sold or traded or bought. Basically, it can be bought or sold. A security or an instrument which can be sold or bought, a financial instrument which can be sold or bought, is a security, right? And there are two kinds of securities. There is a debt security, and then there is an equity security. So debt security is, let's say, uh, you want some money, right? You take a loan of that money from a bank, and uh, the bank will, like, look at the collateral or whatever, they will give you certain money, right? And then they will get a bond from you. They will get a signature, like, signed from you, saying that you owe the bank. Basically, it's like an I owe you this much money at this interest rate, right? So that's called a debt security. Now, can this debt security be traded? Of course it is. Yes, it can be traded and it will be traded, but not by you. It's not traded in open market. It's usually traded by the banks. Like, the banks which actually gave you money is going to eventually sell that to somebody else, and that company will sell it to somebody else. But we're not getting into that. We don't care. We're not getting into that. What we all you all need to understand is there is something called a debt security. Then we have what is called an equity security, right? So an equity security is what we just discussed earlier. You take the ownership of a company by investing a part of your money into the company. That's an equity, like, you're buying an equity of that company. That's called an equity security. And these equity securities are traded in the open market. So you call them, you call them equities, you call them shares, you call them stocks. They're all the same. So I hope you understood, like, fundamentally what is going on, right? When you're buying some things, or why the market is going up. I mean, there are n number of reasons. Like, we will go, like, in much detail level, but at a very fundamental, at a very, like, in 10,000 feet level, this is what it is. So I hope it makes sense, and thanks for listening. We'll cover the rest in the next video. Thanks. Bye.